Is Altria stock a smart buy right now? That's the big question we're tackling today. Welcome to Global Value, and in this video, we're going to dive deep into a thorough analysis of Altria MO stock, emulating none other than Warren Buffett, one of the greatest investors of all time. We'll look at the key numbers that Buffett values most, and then we'll calculate 3 different fair values for Altria to really understand what it's worth in today's market. Make sure you stay with me till the end because our combined fair value and rating might just take you by surprise. And there's more. I'll also reveal a crucial bonus metric that could be the deciding factor when adding MO stock to your portfolio. So is Altria a smoking opportunity waiting to be seized? Let's find out together. Right now, Altria stock trades for $40.82 per share. 2023 has been tough on the business. Their stock price is down 10%, while the S&P 500 is up 18%. But that's not all for shareholders. Right now, Altria pays a huge market-beating 9.31% dividend yield. They're also a dividend king. They've grown their dividends in each of the last 54 years. This yield is added onto any gains in their stock, so their stock price is just slightly down. In the last 5 years, Altria's stock has declined by 5% annually. In the last 10 years, it's a different story. They're up just by 7%, so just a slight increase in their stock price, but this is under 1% compounded annually. When we go back before the global financial crisis, it looks like Altria stock is down. This is because of their spinoff of Philip Morris, which happened in 2008, but their stock price doesn't reflect this. Philip Morris includes the company's operations internationally. They're totally independent from one another now. Since that spinoff, Altria Group has compounded at 4.5% annually. When we add in their average dividend yield over this time, they've actually beat the market. That's pretty impressive. But the burning question is, why should we be paying close attention to Altria? Right now, the company trades just $1 above its 52-week low. They're down $10 from their 52-week high. There's not much short interest with just 1% of their shares sold short. And how big is Altria? They're huge. They have a $72 billion market cap. They're one of the largest tobacco companies in the world. So what does Altria actually do? Altria comprises Philip Morris USA, US Smokeless Tobacco, John Middleton, Horizon Innovations, and Helix Innovations. It holds a 10% interest in the world's largest brewer, Anheuser-Busch InBev. Through its tobacco subsidiaries, Altria holds the leading position in cigarettes and smokeless tobacco in the United States and the number 2 spot in machine-made cigars. The company's Marlboro brand is the leading cigarette brand in the US with a 42% market share as of 2022. Altria holds a 42% stake in cannabis manufacturer Cronos. It also acquired Enjoy Holdings in 2023 and recently exited its strategic investment in Juul Labs. Now with that understanding, let's dive deep into their numbers like Warren Buffett with the Select 6 analysis. Starting with metric number 1, we want their average return on capital in the last 5 years to be above 14%. A normal business earns 7% returns on capital. When we look for a benchmark that's double this, it can build in margin of safety based on the quality of the business. Altria's returns on capital were good to start with over this time, and they've grown in all 5 years. They earned 22% returns in 2018. This has increased to 48% returns as of 2022. That's huge. When these are averaged out, Altria earns 33.6% returns in a given year. That's more than 4 times better than a normal business. This is a huge check starting off on metric number 1. Metric number 2, we want growth in their sales, earnings, and free cash flows to support their high returns. We're going to include their numbers from 2018 until today. In this time, their sales are up just 5%. Their earnings, which were down from 2018 until 2022, are actually up today. These have grown by 26% over this time. This is also the case with their free cash flows. These are actually up 4% today. They brought in $8.48 billion of free cash flow in their last 12 months, which is above where they were at in 2018. All 3 of these are up. This is exactly what we want to see. It's a check on metric number 2 for Altria. Metric number 3, we want to see earnings per share growth. This looks at Altria from the view of an individual shareholder. Just like we talked about in our last metric, their earnings are actually up in their last 12 months, which aren't shown on this chart. Altria has also bought back 5.5% of their shares. They earned $4.90 for each share that they had outstanding in their last 12 months. That's above where they were at in any of these previous 5 years. It's another check on metric number 3. So far, Altria is perfect, 3 for 3. Can Altria keep this up? Metric number 4, we want to see something similar. Here we're looking for free cash flow per share growth. Altria has grown their free cash flows over this time. They brought in $5.02 in 2022. In their last 12 months, they've upped this even more. They brought in $6.27 per share. That's growth from where they were at in any of these previous years. It's yet another check on metric number 4. We're still perfect. Before we look at the company's balance sheet and get into our valuation estimates, how about we check in on our bonus? Right now, Altria pays a market-beating 9.31% dividend yield. They're also a dividend king. They've grown their dividends in each of the last 54 years. But are their dividends safe, and can these keep growing in the future? That's what we're trying to figure out through our bonus. We want their dividends to be supported by their free cash flows. This has been the case in each of the last 5 years. The company has both grown their free cash flows and they've also grown their dividends. They've even decreased their dividend payout ratio over this time. They easily support their dividends today. It looks like Altria should be in decent shape to continue growing these into the future. It's a check on our bonus. In recessions, it's businesses with too much debt that can have the biggest losses or even go bankrupt. Metric number 5, we want the sum of their free cash flows in their last 5 years to be above their net debt. In this time, Altria's had pretty stable levels of net debt. They used $22.5 billion worth in 2022. Today, their net debt position sits at $23.6 billion. In the last 5 years, when we add up their free cash flows, they brought in $40.2 billion of free cash flow over this time. It means compared to the debt Altria uses in their business, they bring in a ton of free cash flow. It's exactly what we want to see. This is a check on metric number 5. Altria looks like it's in a strong financial position. Flawless through our first 5 metrics, does Altria have what it takes to go perfect on our analysis and be a select 6 stock? Why don't we find out? The big metric of them all, metric number 6, we want Altria's average 5-year free cash flow divided by their enterprise value to give us a yield that's above 5%. This is the first of our 3 valuation methods. If this is the case, it gives a slight risk premium to the yield of the 10-year treasury. Right now, Altria has a $96 billion total enterprise value. This adds their net debt and their market cap together to look at Altria like it's a private business. In the last 5 years, we learned they brought in $40.2 billion of free cash flow. This means they bring in $8 billion in an average year. When we divide that by their enterprise value, we get an 8.4% average free cash flow yield. Currently, Altria brought in $8.48 billion of free cash flow in their last 12 months. When that's divided by their enterprise value, we get an 8.9% current free cash flow yield. These both are double the yield from the 10-year treasury. They're above the risk premium we wanted. This means Altria has done it. On metric number 6, it's a check. Altria's a select 6 stock. Don't just run out and go buy the business. This is a starting point for more research. You're going to want to watch till the end of the video as we give them a fair market value and a rating. Everything we've covered so far is important, but there's something missing. This, in my opinion, is the main reason to analyze Altria. It takes us to look at a discounted cash flow model to estimate their fair value per share. A DCF model is based on the predictability of a company's free cash flows. Its outputs are sensitive to its inputs. We're going to use historical assumptions for their free cash flows to grow these into the future. It's up to you to figure out if they'll be accurate or not for Altria. If we assume that their free cash flows decline at 3% in each of the next 10 years, then in the following decade, we'll assume that these continue to decline at 5% annually. We won't add in the company's book value because this is based on how the accounting is done based on their share buybacks. Altria has reduced their share count from 2,800 million shares in 1990 down all the way to 1,800 shares today. They've taken out 1% of their shares in an average year over this time. That and their failed investment in Juul are really throwing off the accounting for this business. Altria likely does have book value that would add to this fair value. That's something that you need to adjust on your own. It's up to you to figure out if these are accurate or not. This is not financial advice, and you need to do what's best for yourself. If we want a market-beating 15% rate of return, which is what Warren Buffett looks for from his investments, at today's valuation multiples, a DCF valuation for Altria is around $24 per share. Keep some key points in mind. Compared to where they've been at in their history, Altria trades very close to its lows in the last 10 years. They have a price to owner earnings of just 8.5 times. This is down from a median of 20 times and just above their minimum of 6.5 times. This is a similar story when we look at their EV to free cash flow. This is at 11 times right now. Their low was 9.5 times and their median is around 19 times. Altria is being valued well below where it's been at in the past 10 years. We're also going to use a guru focus value for Altria. This accounts for their business predictability, potential growth assumptions, analyst estimates for the future, and where they've traded at compared to their multiples. Right now, this comes in at $48 per share. We're going to put together these 3 estimates to get their fair market value, but first, we've covered the numbers Warren Buffett really cares about, but it's the qualities of a business that are even more important to him. Why don't we learn what these are for Altria? We're going to start with a long thesis first. Number 1, the US market, while mature in volume terms, is a highly affordable one relative to other developed markets. This leaves headroom for price increases for many years to come. Number 2, Altria has kept its options open. It has a broad suite of cigarette alternatives in its portfolio that should ensure it holds a leadership position in whatever categories are victorious in attracting smokers to new products. Number 3, relatively low capital requirements allow the company to return significant capital to shareholders in the form of an 80% stated dividend payout ratio policy. But it's not all sunshine and roses for the business. Let's look at a short thesis too. Number 1, as a US pure play, Altria lacks exposure to some of the emerging markets in which total tobacco consumption is still increasing, leaving it exposed to the secular decline rate that's estimated to be around 3 to 5% per year. Number 2, the FDA appears to have taken a more aggressive approach to cigarette regulation in recent years. It's examining a ban on the use of menthol and a lowering of nicotine in cigarettes. Number 3, with cigarette volume in secular decline, multiple alternatives are emerging, limiting the scale and profitability potential of each emerging category. In June of 2023, Altria also completed its acquisition of Enjoy Holdings for $2.75 billion in cash. This comes after the company sold out of Juul Labs and only retains heated tobacco IP rights from a very failed investment. Now it's the moment you've been waiting for. Let's combine everything in our analysis to estimate Altria's fair market value and give our final rating. This far in our analysis of Altria Group, stock ticker MO, they're a perfect Select 6 stock. Their numbers look pretty great despite the bad rap and headwind for tobacco. Warren Buffett doesn't own Altria and he doesn't own any tobacco stocks, but he has invested in tobacco in the past, most famously with an investment in the junk bonds of RJR Nabisco. If Warren Buffett doesn't own Altria, who does? Right now, Altria is only owned by 4 super investors. It's owned by Torrey Funds, Thomas Russo, Lee Ainsley, and Yacktman Asset Management. Torrey Funds is the only one with a serious investment in the company. When we combine all of our estimates, right now a fair market value for Altria comes in at around $39.50 per share. That's just $1 under today's stock price. It's slightly up from their 52-week lows, so it's right around there. Right now, Altria has a street price target of $47 per share, just slightly above our fair value, well within where they've traded in their last 52 weeks. Altria looks like an excellent research candidate. This is a company to dig in and learn more about. It can do very well in serious inflation. If you enjoyed today's MO stock analysis, like it, subscribe to the channel for more, share your thoughts in the comments, and watch this next video.